Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And after 8 days, I have to admit, I'm so excited to start my discussion with all of my real estate millionaires. How you doing, Dion?
Howdy, doing great. I'm excited that you're back too.
And Matt, how are you?
Future vacations revoked. That's all I'm saying.
No,
That was unacceptable.
That was unacceptable. Yeah, we still did the daily financial news, but I will admit to having a little bit of a hole. Because again, I got 7, 8 folks that I talk to every week that are truly friends now. So yeah. So thank you for that. What I want to do here in our first of 2 discussions for my channel is I want to talk about the fact that I think a recession is guaranteed.
Yep.
I think unemployment is going higher. I think it's actually going to be very similar to a 1969 and 1970 recession. So I'll talk about what that is. But as I say, recession guaranteed, unemployment going higher guaranteed. How does that hit you? And then we'll talk about the 69, 70 recession. We'll go to you first, Matt. What do you think? Am I crazy?
Nope, you're probably right.
And Dion, what do you think?
We always invest like we're planning on it being a recession or a stock market crash or a government shutdown or a pandemic or all of those things. So, again, with predicting rates high, interest rates high, inflation high, whatever, or low, have a plan for either. What is everyone's plan for the recession?
Yep. Absolutely. So most folks probably don't study economic cycles as much as I do. Very few probably know what the 1969, 1970 recession was like. So I'll give it to you here. And I do think this is going to be the flavor of the week. Obviously, it could change, but the 1969 to 1970 recession lasted 11 months. And had a total GDP decline of only 0.8%. So that is the classic shallow recession. So I think the recession that we are staring at is probably going to be longer than 11 months. It might stretch out to 16 to 18 months. But as I sit here today, I think it's going to be shallow. This is not going to be a V-shaped, down 5% bounce back like March of 2020. This is going to be, hey, rates are going up. The Fed is going to hold. They're not going to cut in 2023. Unemployment's going to go from 3.7 to, 5.2. Historically speaking, still very low, but not sub 4. And we just have the cure for what we've done the last 2 years is time. Mm-hmm. And I do think that's going to mean negative GDP for probably 4, 5, 6, maybe 7 quarters. But it won't be a drastic one. So Dion, how does that feel?
So I think we've had enough problems to where there's enough uncertainty that growth doesn't happen during uncertainty. Like you've said, be close to revenue, right? Yep. The experimental stuff is going to disappear. So I think this is why your rule audit your network is one of the most important ones.
Number 7,
I want to point
absolutely.
out something like Matt, the lumberjack landlord, investing for over 20 years, like a massive portfolio, super successful, right? Didn't have Section 8 really much until listening to you and me talk and thinking I will diversify, because in 2008, when Matt went from 8 paying to 6 paying to 3 paying to 1 paying, had he had a third in Section 8, a third working retired, maybe some military or whatever, depending on the area that you're in, I think it would have been a much smoother ride. But having a network of people who, I didn't learn that strategy. I wasn't even investing in 2008. I sat back and I said, what are people doing? What would have worked in the recession? And then plan my portfolio around that. And Matt's done that now too. And yes, there's been some challenges, and your Section 8 and I've got a county I won't do it in. I've got one I love to do it in. So it depends on your area too. But that diversification of portfolio is more important now, I think, than ever.
Couldn't agree more. Matt, what do you think?
Yeah, I mean, I think that, it's this is the differentiator I continue to make between investors and operators. I'm an amazing operator. Just is what it is. And I'm really good at seeing what's coming, recognizing and reading the tea leaves as things are occurring, and being in front of it. The crazy thing is, you don't have to be 2 years in front of it. 2 years in front of it means you're too early, and it means you're going to miss out on a lot of opportunity. So there were only a few channels that happened to where they were calling for the crash. It's 2 years. There's still no crash. There's corrections happening. But guys, real estate experts like us knew that stuff was going to happen. We knew that it couldn't go up forever, always. But we also recognized that it wasn't where it needed to be for the end of the trend in the cycle. And so now I look at it, and I just rented out a unit. It was still 9% higher than what it was last year. Like, I don't know what to tell you. I wish I could give them the bad news that they wish they thought they knew how to read from graphs. So I think the big thing is people just have to, one of the things that I actually covered that on my live stream on Sunday, which was, are you prepared? The last 3 months, what we did was we made sure that the people coming off of the government assistance programs, that we were giving them heads up, giving them warnings, giving them timelines, and saying, this is what our path is. And that way, when their benefit disappears at the end of November, we have 3 lease workouts that we did with them, which puts them in the position where they can stay. And even though it might be short term, they still can stay. I don't have an eviction. And then it's a more organized thing. This is the difference between being an operator and being an investor.
Yeah. And I think the really important thing to kind of share with folks, this is my expectation, and this is what I see coming, right? We've been doing this for 50 years combined. And when you see a recession coming, again, where there's pain, there's opportunity, but where there's great pain, there's great opportunity. And I think there's a lot of great pain coming. So what am I doing, right? I'm skilling up on creative financing because I think there is going to be opportunities, whether it be sub 2 or novation or, taking over a VA loan or whatever. I want to get some of that because I want some. If I can get sub 3% money, I will overpay. I'm getting some residential deals. I've already closed, or I have closed one. I have another one that closes December 6th for deal number 2. Again, trying to get deals done before the end of the year because that's where pain is. So this is all about doing the work. Yep. It's not going to be some crazy off the cliff. Fresno's not going to collapse 70% like it did last time. It's not set up that way. And then lastly, something that Grant Cardone in one of his little private groups, I got a buddy that's in it, highlighted. He has, I want to get the right number. I wrote it down. So let me get it. 1,457 large multifamily properties, large being 100 unit and above. 1,457 multifamily properties already don't meet DSCR requirements. They were bought with bridge debt, value adds. They're all in trouble. So there's a lot of pain coming that I've been talking about in the multifamily space.
Sure.
So I'm ecstatic, folks. Do the work. Learn average. Only buy great deals. Write offers. Write lots of offers. This is the time, right? If you've been squawking about missing 08, don't miss this one. What do you think, Dion?
I think anytime we have a video where the title has recession in it, we're going to get some viewers who might not be from the typical one rental at a time community. So if those people are watching right now that haven't been doing the work, haven't been adding cash flowing rentals, one rental at a time, I actually see comments from people on other channels where they say, I'm so glad I didn't buy a rental in the last 2 years because there's a recession coming. And it always circles back for me to the biggest fears for the person who hasn't been adding cash flowing assets, because that means that their income is based on their job, which is impacted by a recession. When you have a recession and your rents might be impacted, it means you have tenant turnover. It doesn't mean your entire portfolio drops to 0. And if you've been investing where you can handle a rent decrease, have you been living where you can handle a wage decrease?
Mm-hmm. Yeah. So what do you think about this, Matt? You were very busy the last 12 months adding units. When you look, you're still chewing through this winter, which will be fun to watch. But when you look out, and again, your market comparatively is small, right?
Very.
Compared to ours.
Yep. 30, 15 and 3.
1,000. Yeah. 1,000,
Yeah.
right? Are there those larger opportunities, like larger buildings that you've always looked at and said, wow, someday, or are they all kind of small 8s, 10s, 20s?
No, I mean, there's definitely opportunity for those. I mean, there were 3 or 4 of them in a city that I haven't done business in, but it's one next door to a town I do business in. I just know the political climate there, and it's just really of no interest to me. And so, no, it's definitely a time to be, I said it probably 6 months ago, Zoo. You and I are going to buy the biggest property we've ever bought in the next year and a half. I firmly believe that for you and for me. I only don't say that about Dion because I know he doesn't want that much work.
Yeah, exactly.
But
He doesn't want to double his portfolio. Yeah.
But for you and for me, that's absolutely something that's going to happen. We're going to buy the biggest thing, and we're going to get the best deal ever. And even better, Zoop, here's my prediction. We get the call.
Oh, yeah.
From a bank. And they go, so I've got a property, and I'm going to start tearing up because that is what I've always wanted to have happen. I thankfully wasn't on the other side of that in the last recession, but I could have been.
You could have been, yeah. It was
on
close.
Being on this side of it, this is what you practice for, right? This is what we're going through all of our units. We're shoring all of those up. We're stabilizing everything that we have there in those units. We've gotten through probably about 70% of them. And over the course of the next 4 or 5 months, we'll get through the remainder. But we're in the position where we're stabilizing those nicely. The returns are looking fantastic. We have 3 major projects that'll be finished by springtime. And when I say major, they're $250,000 guts, on 4 and 5 unit multifamily. So they're decent sized stuff, but yeah, I'm excited. It's the only thing that I don't like about recession is that I know, having seen it twice before in this market or in real estate, I know that there's far too many people that are unprepared.
Yeah.
There's just too many people that are unprepared. And that's why this is the topic I've covered the most on my live streams is, are you ready? Are you ready? What have you done to get ready? Because it sucks. But if you're a good operator, this is when the good operators get rich.
Well said. Dion, looks like you want to say something.
I was trying not to. I am thoroughly entertained by the spectrum of investors that we have just in the 3 years.
Yeah.
Right. Mike, you have your property management, you have your teams. Matt, you're running this all yourself, and you're talking about $250,000 gut rehabs on 4 and 5 unit properties, right? And there are people sitting back going, I see the awesome value add, the equity you're creating, the cash flow you're creating. And I'm sitting back going, in the entire world this week, my entire task, other than I'm looking forward to my live stream tonight, but my task is I have a motion sensor LED exterior light to replace, and I'm probably going to call a guy. There are people out there that are like, oh, yep, I'm as lazy as Dion. I would love to have that too. But I totally get what you're doing is huge. Like what you're creating, that generational wealth, that massive portfolio. If somebody talked to me 4 years ago, I probably would have said, oh, I can't wait until I'm at that level. The shift that happened to me in the last couple of years where I thought, well, I hit 50, right? And I was like, what would it take to enjoy life? And it was 16, possibly less rental units kicking off a couple $100,000 in cash flow every year that I'm going to try to spend.
Yeah.
So that was entertaining me. And I was trying to figure out a way to not sound like a douchebag. Couldn't say that, but I have so much respect for what you guys do. It's just, there's a spectrum.
I just have 3 kids that haven't gone through school yet. So that's
haven't been talked out of going to school yet.
Yes, that too.
Get a trade.
That too. Well, so for us, I mean, that was exactly the consideration. That's what Ash and I talk about. And we just said, this is the lifestyle that we want. This is how we want to set ourselves up. We want to be able to, buy a house somewhere that we can go to and take 2 and 3 week vacations. We call it the Dion plan. And so that's all stuff that we want to do. But when you're not a bachelor traveling like that, and I got to buy 5 of everything, 5 tickets, 5 bedrooms, so that's where it's like, so I have to be at least 5 times as big as you just to carry, so,
and now you're about 20. So just
right. Not 20, like
135 now.
Yeah, it's 8. It's like 8.
All right. I'm not the math guy. That's why I don't have a big portfolio.
This is why I'm helping you. It's like 8. So, but that's the thing is like, again, to Mike's point, or to your point, Dion, there are properties that I will probably sell. There's probably some where it's like, you know what? Somebody actually was smart and followed my 4-3-2-1 strategy, and they bought one of my 4plexes to move into, and they're cash flowing and living large, so yeah, that's something that definitely is going to happen. There's definitely, I think all of us trade some assets in the next, year and a half.
Yeah, I think that's going to be another big point. I'm glad we'll close on this. I do think I will 1031 out of
Definitely.
a couple of my Class C units into some Class A stuff just because I can, right?
Class C singles, Mike, or apartments?
Probably singles, because again, what I see going on in my market is below the median is just
Yeah, on
nothing,
fire.
and,
Yeah.
and I own a nice size chunk of that. So yeah, I think it might be, again, I'm going to repeat what's in my book one rental at a time. I'm going to sell a house and buy 8 units. I'm going to sell a house and get a 10 unit. I'm going to sell a house
Yeah.
and I'm going to sell 2 houses and get 25 units or whatever it's going to be. It's going to be like rinse and repeat. It's going to be so boring having done this before.
Oh yeah, it's going to
Boring
be
is
horrible.
sexy.
Yeah.
Boring is sexy.
And Mike, real quick to your
Yeah.
point. So again, another shout out for you on, I think you were the one that that brought this up when the three of us started talking. When you said inventory is going to be a problem, there's actually a town that I do business in. There are 0 properties for sale. Not one.
Supply
0.
destruction. Supply
Right?
destruction.
100% agree with you.
Yeah. And I don't know if you guys saw my daily yet, because I know we just started.
Haven't.
FHFA, month-on-month housing, up 0.1% on price. Up.
Awesome.
Not down, Crash Bros. Up. We'll leave that one there. Dion, how can people find you?
Right here on YouTube, Dion Talk Financial Freedom, and sometimes in the comments of those channels that are talking about the crash, where I'm pointing out and getting blocked that home prices are going up.
Matt, how about you?
Oh, Dion, you're an inconvenient truth.
Yeah, stop speaking truth, Dion. It's a bad look.
Lumberjack Landlord on YouTube and on Instagram. And we have a ton of stuff in the next 2 weeks that we're going to be posting to Instagram, because every day one of the crews is making a major update to one of the projects. So lots coming.
That's awesome. Thanks, guys.
Thanks, Mike.
Ciao.